Our next guest says if there was greater cooperation between the exchanges, Thursday's downturn might not have been as steep. Joining us from the NASDAQ exchange is Richard Repetto. He's a principal and analyst at Sandler ONeill. He's been recognized as a top-rated analyst by Financial Times Starmine for the last 3 years. Rich, thank you so much for joining us. We appreciate it. So do you think, do you expect this, that there will be some sort of agreement here between the exchanges, that there will be harmonization, as it's being called, of circuit breakers, and how much of a difference is that going to make?
Yes, I think there will be an agreement among the exchanges. I mean, they can't, our markets just can't stand to leave, this problem go unsolved. We can't go through what we went through last Thursday. That will just, if it would ever happen again, it would just be, a confidence shaker for the investor.
So what does this mean? I'm curious, since this is something that the New York Stock Exchange does, and sort of there's going to be a mandatory adoption by the other exchanges, does this put the NYSE at an advantage at all?
Not really. I do think the NYSE has a unique model with their they have a hybrid, so they're both automated and they have the human specialists. But I don't think it will be all up to the NYSE. I think, and I have not seen the agreement or know any of the details, but my guess would be that it'll be the listing market that will be able to outline the procedures. For example, a NASDAQ-listed stock like Microsoft, the NASDAQ will likely control the delays if it got really volatile. And in regards to an IBM that's listed on the NYSE would be responsible.
Now, on the day when all of this was happening, we were talking to some of the folks on the floor of the stock exchange, the NYSE that is, and they were saying, under the old model, this wouldn't have happened. You had a market maker who was an actual person, which still exists for many trades, and that you don't get these kinds of imbalances under that system. Does that mean we're going to see a return to that kind of trading at all, or do you think that it's too far to go back to those days?
Yeah, you took the words out of my mouth. It's too far to go back. To the, trading has become automated. It will be automated in the future. You can't go back that far. But in very highly volatile times, like last Thursday afternoon, I think everybody recognizes that you need to sometimes pause or slow down. Even, and this has been reported in the press, even the algorithmic high-frequency traders slowed down because they understood that the markets were just acting, not normally, to put it that way.
Well, I wanted to ask you a question about the high-frequency traders as well, because even if you have coordination between the exchanges and you have the circuit breakers triggered and you have a slowdown of trading, there was some talk that high-frequency traders pulling out of the market exacerbated the drop. And is that something that would be under any types of regulations? It doesn't sound like it thus far.
No, that is certainly possible, that the trading of high-frequency trading, them pulling back volume or removing liquidity probably didn't help. But that's just the sort of thing that a slowdown, would heal. We're not talking slowing down for all afternoon. We're talking slowing down for a second, maybe half a second, maybe a little bit more. That's just all the time everybody needs to sort of rebuild the liquidity so the markets don't behave irrationally, so these guys can enter the market.
Now, coming out of this, are any of the exchanges better positioned than the others in a competitive way?
I would say probably not at this point. I think the NYSE, with its market human, system, is probably a little bit more advantaged, but all of them can implement, I believe, some sort of slowdown through technology that I think will be a key remedy. And also the second part of that remedy is that they all do it. That when the NYSE slows down predominantly three-leaded stocks, symbols, then everybody slows down. So it's a coordinated, uniform delay for, to get the markets back in check.
Right. All right. Well, Rich, we'll see what comes out of that hearing today. We appreciate your time. Richard Repetto of Sandler ONeill, an exchange analyst, talking to us about this coordination that's expected between the exchanges.